Ladies and gentlemen, this is a bullish trend, and this indicator indicated that the market is going to reverse to the downside right at this point. If we let the market play out, we can see that the price indeed went down, and if we were to take a short position here, we can see that that trade would have been profitable. Now, here we have a bearish trend. The same indicator indicated again that the market is going to reverse to the upside at this point. If we were to bet all our money and take a long position here, we can see that the market indeed reversed to the upside. And the same thing happened for this bullish trend. It reversed at the exact spot where this indicator suggested. Now, I know you may be thinking,
but what exactly is this indicator?
Well, stay tuned, because in this video, we're gonna go over exactly what this indicator is and how you can use it to trade based on trend reversals. If you happen to find value in this video, remember to leave a like. Let's get into it. This is a video about a unique indicator known as the Smooth Price Oscillator, which was created and published by the TradingView user 𝐵𝐵. Now, to add this indicator to your chart, you want to go to TradingView and then open any trading security that you like in any time frame. For me, I'm going to be using the 15-minute time frame of GBP/JPY. After that, you want to click on Indicators and type in Smooth Price Oscillator. And then you may want to select this one by 𝐵𝐵. So what exactly is this indicator? Well, the Smooth Price Oscillator by 𝐵𝐵 is a tool designed to help traders like you and me to identify market trends, potential reversal points, and mean reversion opportunities in the market. It does this by utilizing the John Eller's Super Smoother filter to create a refined and noise-filtered oscillator. As you can see, it's a super simple indicator, which is made up of the following components. First up, you can see we have an overbought level at the top, which is this line traversing the indicator window, and then at the bottom we have an oversold level. The main component of this indicator is this oscillator that changes color between teal and golden. Whenever this oscillator is colored teal, that indicates bullish momentum in the market. Conversely, if it's colored golden, like here, that indicates bearish momentum. The interactions between this oscillator and the overbought and oversold levels are going to be used to produce strong mean reversion signals. Basically, it's an indication of when the market is overbought or oversold. For example, right here we can see that this oscillator crossed above the overbought level, indicated by this X label. But it doesn't just stop there. There is also an X label on the chart with a plus sign, and there is also an arrow to tell you that the price is more likely to go down. Now, on the other hand, whenever the oscillator crosses under the oversold level, like here, you're gonna get these tiny teal-colored dots, and then overlaid on the chart, it's gonna be the same dot label with a plus sign. The plus sign is just a signal to tell you that these are strong mean reversion signals. Now, we also have weak mean reversion signals. Actually, they're actually called simple mean reversion signals, and they're actually going to be printed based on the interactions of this oscillator with these tiny horizontal lines right here. These lines are actually called threshold lines, and they're located at the +1 and the -1 levels of this indicator scale. As you can see, the one at the top is at the +1 level, and the one at the bottom is at the -1 level. So whenever the oscillator crosses above the upper threshold, you're gonna get a similar signal to the strong mean reversion signals, but these signals are not gonna have the plus sign at the top and bottom, which tells you that even though it's a reversion signal, it's a weak or a simple mean reversion signal. So when using this indicator to trade, it would be a good idea to use these simple mean reversion signals not for trade entries, but you can use them as trade exit signals. So if you take a trade based on a strong mean reversion signal like this one, you can hold your trade and only exit as soon as you see a simple mean reversion signal like this one. Finally, looking at the settings of this indicator, you can see that we can change the smoothing length. If we put a higher number like 50, we can see that the indicator is now going to capture longer term trends in the market. So I think the default value of 20 is what I'm going to go with. Now, I'm not really going to be using these threshold levels, so I'm not going to be changing this number. And then on the style tab, I'm going to disable the mean reversion down and the mean reversion up options. After you've made your changes, click OK. Now, I know you may be thinking,
But apart from using this indicator to identify trend reversals, as you showcased at the beginning of this video, how else can we use it to trade?
Well, you can also use it to identify the momentum of the market. If you have a buy-sell indicator, something like the Pine Trades Market Beacon, it's actually a private indicator, and I'm gonna put the link in the video description. But if you have an indicator like this and you want to take long and short positions, you would only take long positions like this one in an area where this oscillator is colored teal to indicate that this long position is happening within a strong bullish momentum. So taking this trade increases the chances of it becoming profitable. And of course, for a short position, you would want to identify a short signal printed by the Pine Trades Market Beacon. And then to confirm the signal, you want to ensure that the smooth price oscillator is colored golden to indicate the presence of bearish momentum in the market, increasing the probability of this trade becoming profitable. I actually backtested this simple strategy over the last 3 months on the 15-minute time frame of GBP/JPY, and then despite taking over 160 trades, the win rate was 68% with a 1 to 1.5 risk-reward ratio. So if you want to explore this strategy, I'm gonna put this link in the video description, which is gonna take you directly to this page to get access to the Pine Trades Market Beacon indicator, and you can see for yourself how efficient this strategy is. But if you can't access the Pine Trades Market Beacon but still want to use this indicator to trade, there is an equally decent strategy that we can use, although I didn't actually backtest this second strategy. It involves adding an extra indicator known as the Variable Index Dynamic Average, or the VIDIA indicator. Once you've added it, you want to double-click on it and then change the VIDIA length to 55. On the Style tab, you want to disable the second plot option as well as the lines option. After that, click OK. Now, taking a long trade using this second strategy is gonna be as simple as this. As mentioned before, these signals are used to indicate trend reversals or mean reversions, basically an area where the price might have been trending in one direction and then reversing to the other direction. For a long position, we want to look for a bullish mean reversion signal like this one, and it should be happening within a bullish trend, as indicated by the VIDIA indicator. Now, to know whether the trend is bullish or not, you want the trend cloud of the VIDIA indicator to be colored green, and the price should be trading above it. This indicates a bullish trend. Once we have this, you want to look at this table to ensure that the delta value is above 10% to make sure that the market is not ranging. Combine that with the fact that we have a bullish mean reversion signal right here, and I don't see any reason why we shouldn't be taking this long position. You want to put your stop loss at the bottom of the trend cloud, targeting a risk-reward ratio of 1 to 1.5, letting the trade run. And as you can see, ladies and gentlemen, the trade was profitable. Now, for a short position, it's gonna be the opposite. Condition number 1, you want to ensure that the trend is bearish by having a red trend cloud from the VIDIA indicator. Condition number 2, we want to have a bearish mean reversion signal printed by the smooth price oscillator. To have that, you basically want this oscillator to go above the overbought level and have this reversal signal printed. Once we have it, we want to confirm that the trend delta value is below minus 10% to indicate that the bearish trend in the market is strong enough to push the price down. Right here, we can see that this number was below minus 10%, which means this entry is a valid entry. You want to put your stop loss at the top of the trend cloud, targeting 1.5 times the risk for your take profit, letting the trade run. And as you can see, it was profitable. Ladies and gentlemen, this is the Smooth Price Oscillator by Big Beluga, a powerful tool for spotting trends and reversals. Pairing this with the VIDIA indicator enhances your trade precision. Remember, this video is not financial advice and I am not a financial advisor, so do your own due diligence before investing with anything. If you found value in this video, remember to leave a like or even consider subscribing to stay tuned. Thanks for watching. See you next time.